Right, good morning, everyone, and we are at the end of another week in financial markets. And as we have a look across the calendar, we just see what went on over the course of the week. We can come across to Wednesday, and we can have a look at the R, B, and Z. Now, we had a couple of central banks out on Wednesday of this week, couple of central banks this week. R, B, and Z hiked rates again by 50 basis point, 0.5%. In line with expectations, but again, like how they've gone about hiking interest rates, they have not come in over the top in terms of hawkish commentary. There's not been a lot of hawkish commentary. They have hiked their interest rates with quite dovish commentary right the way through. So quite a smart thing to do to not influence the price of your currency as much. And now they have got interest rates back to 2.5%, which is back up towards a sort of a level that can control the situations in these economies. Apart from that, then we had the Bank of Canada, and we saw a 100 basis point hike from the Bank of Canada. Consensus, as you can see here, is only for 2.25, and then we actually came in to spot 5. So 100 basis point hike out of the Bank of Canada yesterday. A little bit surprising, a little bit over the top, but we may see a bit more of that going forward. So bit of a hawkish Bank of Canada over the course of yesterday, but that was not relayed in dollar CAD. Because we had inflation. Out of the US. Now, inflation last month, as you can see here, came in at 8.6%, right? Consensus was for 8.3 the last month, and it came in at 8.6. So we had a beat on expectations of from last month, and this month we can see again we're expecting a rise in inflation up to 8.8%. That's actually come in at 9.1%. So markets immediately started to price in a 100 basis point hike out of the Fed at the next meeting. But we did have two speakers from the Fed, two voters yesterday. They come out and they were speaking, saying that that they are not looking at a 100 basis point hike. They do still think that 75 basis points is appropriate, but they will monitor the data over the next couple of weeks to more inform their decision making when it comes round to their next interest rate decision. So that will be interesting going forward. They say they're going to have to look at the data to make a better decision, which means that we can also look at the data to try and find trading decisions. But apart from that, then we move on from that. We'll show you a look at the charts in a minute. We had a bit of unemployment out of the Aussie. Pretty strong figures. Previous was 3.9. Consensus was 3.8/3.9 with the forecast, but it came in actual 3.5. So a big beat on Aussie employment, but it's not resulted in a massive amount of price movement, and that that has been kind of discounted a little bit by the GDP figures out of China, showing again a slowdown in the world's second largest economy. Consensus for 1% growth did only grow by 0.4, down from 4.8 over the previous quarter's figure from the year prior to that. So GDP obviously slowing down, likely to do with the COVID measures taken throughout the country, and that is likely to cause a impact on something like the Australian dollar as well, which saw some downside with over the course of this morning. So a couple of central banks hiking interest rates. Substantially a 50 basis point hike from the RBNZ, 100 basis point hike from the Bank of Canada, and pretty strong inflation figures out of the US as well at 130. So if we have a flick across to the charts and we just see what's happening in terms of the charts, we look at the S&P 500 and Bitcoin straight away. Just risk assets. You expect something like Bitcoin and the S&P 500 to sell off in the wake of high inflation and over the top hawkish Fed. That is something you would expect to see, and we have not seen that materialize over the course of this week. We are still holding these lows on the S&P 500. Stick it back on this weekly time frame and zoom in. We've had 3 rejections to the downside on the last 3 weeks. We've held above this level for 3 weeks, so it is an important level to us going forward in the S&P. But what's interesting to me is that the strong over the top inflation figures, pricing in of a 100 basis point cut from the Fed, or hike, from the Fed, has not resulted in this level break into the downside, which is interesting for me. As long as we can hold that, you'd have to think risk assets are forming some sort of a base. You have a look at this as well with Bitcoin, this kind of range, is this a bottoming out around 20,000? Remains to be seen. If I delete these two lines off it and just don't look at it a range though, what else we can see is just something like that, and then that, and then that, a bit of a flag looking for continuation to the downside. So this can be drawn a couple of different ways, can be interpreted in a couple of different ways, but we did see the same thing back there, and we know in markets history does repeat itself. So we could look for a bit more downside over the course of this week, or over the course of next week in Bitcoin. But interesting for me is S&P holds that level. Bitcoin can't really sustain any move below 20,000. To me, that would say potentially they are both forming a bit of a base. Look across the euro dollar then. Euro dollar, we have touched parity in euro dollar. For the first time in 20 years, we have hit 1-to-1 with the dollar and the euro. What is interesting to me though is we tagged it. This is yesterday's candle, today being Friday, this being Thursday, Wednesday, Tuesday. We tagged it for the first time on Tuesday, failed to break it, right? Tagged it for the second time on Wednesday, failed to break it, right? Two good hesitation candles, two dojis. Good hesitation candles around that one. We then broke it, right? We actually broke it yesterday. The break came yesterday. We got 50 pips lower, down towards 99.50, and then pinged straight back up. Now, there was a reason for that ping straight back up. Yesterday, we did see the two voters out of Fed. They did mention that they were not looking at the 100 basis point hike. They thought 75 was still appropriate, and that they did actually comment on that when price was down there. So, there was a reason for that pinging back above 1, but I think as long as we are above 1, it's a difficult sell. As long as we are at 1, it's a difficult sell. I mean, you still think if this is any sort of retracement back up towards here, you still think selling rallies is the way to go on this, me personally. But any spike I think could be worth selling back into. But as long as we are chilling down around this level, I think that causes us to be careful. We're met with a hammer. Yesterday's candle was a hammer, a big daily hammer at the support level of the round number. So doesn't mean we can sell it right now. As I said, we probably have to wait for a spike, or I'd want to wait for a spike or any sort of a retracement to then sell back into. But if we don't get that and just go straight lower, we won't want to see a daily close, weekly close below that round number. So that weekly candle will be something I will be looking at with a lot of interest coming into the close today. The dollar index up at 109, rejecting 109. It's not really much of a level. It's just kind of a round number on the way up. So the round number that we're looking at, the level that we're looking at, is on euro dollar and not the dollar index. In terms of risk assets forming a footing, this 10-year yield has been just chopping around 3% for a long time. It has not extended that move higher. An extended move higher in yields would probably cause an extended move lower in something like S&P 500 and Bitcoin. But as long as this US 10-year yield fails up about 3%, this should likely prove supportive for something like the S&P, likely prove supportive for something like the Bitcoin. What that means for the dollar right now, I am a little bit unsure. The dollar just keeps trucking, regardless of what anything else does. The dollar keeps trucking, and it's not called, or it is called, King Dollar for a reason, isn't it? The dollar reigns supreme when times are like this. So don't fight the Fed, they say, but I would really struggle to sell some dollars with any sort of great intent, as when you take into account what is going on at the moment and the way historical price action works around these sorts of times. But we'll come across to the calendar then before we wrap this up on to next week. Busy calendar in terms of UK next week. We got employment figures, labour market figures out on Tuesday. We got inflation figures out on Wednesday. We have then got retail sales out of the UK as well on Friday. Some PMIs, some consumer confidence figures to go with that as well. So next week's the busy week in terms of the UK. Will be interesting to see how that plays out. But obviously the political situation in the UK isn't great. The political situation is not great in a number of different countries. We've got the ECB next week. As you can see, the ECB and the Bank of Japan are both on Thursday. ECB are pretty tricky. I mean, we spoke about euro dollar down to parity. Euro dollar's down to parity for numerous different reasons. Looking towards the energy crisis, soaring natural gas prices. Energy supply from Russia. They're undecided whether they're going to be able to keep the energy supply from Russia, and those things are only weighing on GDP growth, kind of tying the ECB's hands in terms of aggressive monetary policy. They are due to hike interest rates by spot 25 by 0.25%, the first interest rate hike in 11 years out of the ECB, while the trajectory that the Fed are on is completely different. So there are numerous factors. We are weighing on the Eurozone. Once you factor in the sanctions on Russia and the implications that's causing across the European economy, there is a cocktail of things stirring up against the Eurozone, European Union. Once you couple that with the political turmoil going down in Italy, with the Prime Minister, the ex head of the ECB, Mario Draghi, saying that he was potentially looking at resigning. If the Five-Star Party in Italy, the Five-Star Party in Italy did suggest that they were not willing to partake in the vote of confidence over the course of this week. And then Mario Draghi said that a government without that Five-Star Party is a government that he does not want to head. And that removes some confidence over a deal they can strike with the European Union to lend some support to their economy, which again is likely to be a negative if that materializes. The government don't want him to step back. The government have rejected his request, and we will find out next Wednesday whether that comes to fruition. We then got the ECB on Thursday. We do have the Nord Stream pipeline potentially being shut back on Thursday, as well, same day as the ECB. If that does not get shut back on, and there is a lack of then supply of gas and stuff to Eurozone, again, that is just another thing kicking the euro when it's down. So there's nothing really good about the euro. A lot of things negative, but if markets work the way they not sometimes work, that can be the base for no reason after touching parity. So we do need to be careful about that. But for now, I think selling rallies on euro dollar is the way to go. But apart from that, then the calendar over the course of next week: Bank of Japan, ECB on Thursday. That pipeline getting potentially switched back on Thursday. Then a raft of UK data as well. Canadian inflation Wednesday 1:30 might be worth looking at after that 100 basis point hike over the course of this week. That is it from me then, folks. Pretty busy week, bunch of things to cover over the course of this video, so a little bit of a longer one, but that is all good. And then we are expecting pretty good weather in London over the weekend, so we can get out and about and enjoy ourselves. That's nice. We're expecting 35, 37 Monday, Tuesday, so it's a pity we couldn't get that tomorrow and Sunday, but it is what it is. We'll still be alright. Be able to switch off markets, get out and about, enjoy some sun. You should do the same, and we'll see where we end up next week. So have a good weekend. We'll speak to you next week, and we'll update again next Friday for another weekly market insight. Thank you.